Hey traders, it's Leaf West. I'm going to go over my trading in Apple on Friday and to talk a bit about what I did. I did a couple of trades and made mistakes in both of them, but ended up making a little bit of money overall. But again, I made mistakes in both, and so it's something that I can learn from, and I think hopefully you'll learn from as well by my mistakes. But before I do that, let's take a look at the opening range that my software draws. Again, we had a break below the opening range relatively quickly in Apple. Apple's been weak as of late, and people are still pounding the stock early here. And we made a pretty good low here and jumped up. And as I've shown in the videos for open range, you rarely break in back into the opening range on the first attempt. Usually you have to pull back, and that's clearly what Apple did in this case. And it's the second attempt you want to get involved in. And I wasn't looking at the trade from that perspective. I wasn't looking at it from an opening range perspective. But I wanted to hit on that because people looking at this video might be thinking that when they see the open range levels here. And again, once you get that second level and it gets into the range, and here Apple pulled back a little bit, but quickly got back in. And once you do that, you generally will go to the other side of the range, and that's what Apple did. In fact, we had a breakout, and again, I didn't play it this way, but generally what you do is you wait for the pullback to retest, and this is the area where I got involved in in the second trade, and I'll show you the mistake I made there. And Apple failed the break higher, went back into the opening range, went to the other side of the opening range, which it's liable to do, and then mucked around into the close. But I want to talk a bit about the actual trades that I did, and I'll show you why I did what I did. So hang on one second. This is the actual picture of the chart that I actually tweeted after I got long Apple um, in the morning for the first trade. I looked at it as a continuation trade, so I actually drew a grid off of the low that Apple had made to the next swing high, and was watching my squeeze contraction pattern indicator had gone green, so I knew that expansion was going to follow. So that's why I was really eager to get involved here, and I got involved around, I think it was around 10 o'clock my time, 11 o'clock Eastern, and I think I got filled at 382.35 if my memory is correct. And my plan was to try and buy in this gap here, which was at 382.40ish was my plan, I believe. Um, and that the key there was it's in that gap or that warning track area that once you get into that area, that's generally a good spot to buy if you are going to play a breakout trade, because you have better price and you get to withstand the heat if it pulls back in. And it was above the moving averages, it was above the weighted average moving price, so that to me was the spot that you could get a lot of squeezing going on and really catapult the trade further ahead. So that's a trade I posted, and that was the general sort of thought. My stop was down here at 380.70, which is generally, I try to get it in the middle between the breakdown of the pattern and this 7086 number. So I generally pick a level in the middle of that sometimes, or based on round numbers, what have you. But anyways, I picked 380.70 for a stop in this trade. So let me get up the real 1 minute chart for you. So this is the 1 minute chart. Now actually the grid I was watching was actually the contraction pattern grid, which was a little different levels, but basically the same idea of the trade, but the levels on this picture of the market are a little different from the snapshot that I tweeted back on Friday morning. But anyways, my goal was to get just above this area. We had a stop buy at 383.40 cents, and I think my fill price was a few cents above that, a bit of slippage there. I think it was 383.45, I believe. And if you look at the targets here, my first target was 386 even. Really, that was because I like to go in front of these targets for volatile stocks like Apple is. But make a long story short, I took profits. What did I sell it at? I think I sold it at 383.93, which was right in front of the previous swing high. I think I took it on this when it went up and pulled back down. So my thought was that we hadn't proven that we were going to be able to bust this, and so with Apple, you often will get a big retrace. So my idea was that we were going to pull back to the actual breakout area, and that's where I was going to buy long again if it looked like it was going to hold. So it never got there, and off it went to the races. And sure enough, if we go to a 3-minute chart, we can see where we went relative to our price targets. The first price target was just missed on the first attempt, which again, Apple and stocks like Apple quite often do. They'll be just short of these targets. Pull back, and then and our second target from this contraction pattern was 388.72, and we made it to 388.70. So again, that's one of the reasons why I like to go a few cents in front of these targets, because the computers know where these levels are, and they'll stop it short of that of those levels. So we made the high of the day on this push through, and then I got involved on this next contraction pattern. You can see this green area down there, and I was periodically going back to Apple's chart and not really focusing on it too much. I thought there might be a bigger trade higher because of all the negativity, to play another squeeze higher later in the afternoon. So I was going back occasionally, and when I came back to the chart, I saw a squeeze, a contraction pattern setting up, and my squeeze indicator going green. So my immediate thought was to get involved long again, and so I put up another grid and went long the stock and put my stop in and showed the targets. And probably even before I got the chart tweeted, my stop was taken out. And I'll show you where I went wrong on this trade. And it was mainly because I jumped back to this trade and quickly made a decision to get long without my worst decisions for trades are when I do something quickly based on a first glance of a chart. And to increase the odds of a trade to work, you have to have a better sense of where you are in the trading range, and where potentially the chart could go. And I did not have that with Apple. And let me show you. First the chart I tweeted on Friday afternoon. So here's the actual chart. This is, I think, a 1-minute chart, and or is it a 3-minute chart? I can't tell from this. Or can I tell? It's a 1-minute chart. Sorry, it's a 1-minute chart. So here we have the contraction pattern. We have my squeeze indicator gone green again. I've got my grid up. The price had pulled back in a two-legged move lower, which is a nice sort of ABC correction. So the idea was that off to the races. Now your pullback is over. Now we should go on and make new highs. And I got eager for this trade, and what did I enter in? I think I went long at 387.30, which was, I think, probably got almost a top tick. No, I think maybe 40 cents was the top tick of this push here higher. But we pulled back, and we made a nice bounce off the 78.6 level on this pattern. Quickly got above the 38.2 level, was holding it, and so it's to me it looked like the spot to get long. And so again, I tear into these trades for this very reason. My plan was to buy another tier, another 200 shares once you broke through the top of the pattern. And if you think about it, this pullback had not confirmed that it was going to go higher, because we did an ABC lower, but this could have been the A as a part of a bigger move lower. And so the key was, if this is just the A part of the wave, you want to confirm the break of the high of the first leg before. Well, actually, it's probably this level here. Probably this level at about 388 is the actual confirmation of the market. It's going to go higher, and whether you bought it there or whether you bought it on a pullback after you made that high, that's each trader's decision. But what actually happened, if we go back to the actual price, is, so I bought right in here. So what actually happened is we did let me go to the 1-minute chart. And get rid of this and put up this. that. Put up this. So this is the actual grid I was looking at. Here's my contraction pattern. Here's what I was thinking. I'm thinking here's where I'm going to get long and it's going to break higher. Once we took out this push down lowers low, that was a sure sign that we were going low. But my mind was not there, so I was not prepared for that. In fact, my stop was right in there. So I contributed to this down push on Apple. So anyways, I didn't analyze the trade properly. And if you look at a 10-minute chart in Apple, you can see that the 10-minute chart had reached a peak and it wanted to pull back and retrace. So the odds favored a move lower in Apple, and I missed all of that. And actually, if you put up a continuation grid from this first leg down, you'll see that we didn't even get up to the 61.8% retracement level, which really is the level that price has to get above there to show you that it wants to go higher. So the failure on the second move to get above 61.8 was the death knell for this thing. And if I had been better prepared, I think I would have done a better job. And so what is, where did we go from this continuation program or pattern? Sure enough, we went right down to the target of 382.54. So that would have been a sweet trade if I'd been my mindset properly, and got on this right side of trade. Even if you waited for the breakout and confirmation of the trade. But for me, I had my stop in, and I was tweeting about it. I wasn't even focused on going short. I was rubbing my hands, hoping to double my profits so far in the day in Apple. And I think I lost. What did I lose? I probably lost I think my stop was 386.50, and I got a couple cents slippage on that again. So I lost probably 80 cents on that. So I made $1.03 on the other, but I made it on twice as much shares. So I made okay. I did okay, but it would have been sweet to catch this, a nice long, then a nice short, and anyways. So we'll leave it there. I think the video's over 12 minutes now already. So hopefully that helps people understand the kind of things I look for when I do trades. Don't always do them properly or incorrectly. That's the battle every day. But that's the measured, calculated trades that I like to do, and they're much less emotional, and that's what I try and do. All right, have a good day, and see you on Monday.